You don't need fancy tools. You need repeatable setups. In today's market, the easiest gains come not from luck, but from patterns that show up again and again and again. So let's break down the simplest ways to find an edge without all that unnecessary complexity. So the biggest thing, focus on support and resistance. Support and resistance lines aren't just lines. I mean, people want to kind of downplay technicals. These are where traders make real decisions. It's where the buyers are in control and where the sellers are in control. Entries, exits, breakout, fakeouts, they all happen at these key levels. So let's talk about EVTV for today, or actually yesterday and today, because this one, just a beautiful technical play in many ways. So yesterday morning, EVTV gapped up on news from about 48 cents to $1, 100% gap up roughly. And then it really started respecting those technicals. So let me zoom in on yesterday, and I want you to focus on that purple line. That purple line was resistance early in the day. It's roughly about $1.20 a share, roughly, okay? Remember, as much as I believe and use technical analysis, sometimes people get a little too picky down to the penny. We're looking at zones here. So whether it's 121 or 120 is kind of immaterial. We're looking for those areas where a stock cannot break, because that's resistance, because when resistance breaks, it then becomes support, and we can key off of these levels. So if you notice, all pre-market, the light gray area, and then into the market day, 120 was just an absolute brick wall. Couldn't break, couldn't break, couldn't break. Then at about 10:15 a.m., finally broke through that resistance and then never went below support the entire rest of the day. Now, one thing I want to point out is yesterday morning, EVTV had a $1.32 entry signal from the Oracle algorithm. Now, maybe you're familiar with the Oracle algorithm, maybe you use it, maybe you've heard about it. What it really does is it makes technical analysis so much easier, because it basically does it for you. You don't have to identify these levels on your own. You don't even have to drop the lines, because these lines are mapped out by the algorithm. So that $1.32 entry price, you can see, was after it broke through resistance. So that's where you would have bought. Now resistance becomes support. So we don't sell the stock unless it breaks support. 120. Remember, we're going to keep talking about this 120 level because it is so key. Now, the nice thing was it broke 130, went right to 170, actually 181. So a nice spiker. You could have made a quick trade there, been in and out, 30, 40, 50 cents a share, banked, gone to work, called it a day. But if you were trading all day and you were respecting the technicals, you would have stayed in this stock, because you'll notice, even though it got a little shaky midday and pulled back, basically the lowest it went was 127. So 5 cents below the entry. So at no point would this be a big loss. At no point would you be a bag holder. Sure, you'd be a little red. 5 cents in the red. I mean, you got to give these stocks a little bit of room. But if you were respected the fact that it never broke support, you would have stayed in the stock, and then look at what happened at the end of the day. Blasted off into the market close to 250 to 260 basically. So a 100% move from that technical entry from the Oracle algorithm, 100% in a few hours. Then you stuck around till after hours. The stock ran up to $3.80 from $1.32. Now, the other thing I like about this stock is it did the same thing again today. So I'm going to talk about these support and resistance levels from the Oracle algorithm, because I didn't have to do anything manually on day two. I just respected what the algorithm gave me. And you can see we got 360 and 305. So all of after hours last night, banged around, banged around, banged around, support resistance. Couldn't break, couldn't choose a trend, didn't know what it wanted to do. Buyers weren't in control, sellers weren't in control. The stock was just undecided at that point. So chops around, chops around, chops around, and then this morning finally broke through that 360 level, did pull back to VWAP, but never violated that lower support level. So much like yesterday, and that's what's great about these stocks, is the patterns will repeat day after day. So you would have entered right about 360, you would have had a stop down about 307, and yes, the stock pulled back, never violated that lower level. You stay in the stock, exploded to $4.91 from a $3.60 entry. Now, I'm not saying you would have perfectly timed the exit, but think of the upside relative to the downside on this trade. And all we did back-to-back days on, arguably the hottest stock is just use the technicals. Now, this did have an underlying catalyst. There was news behind the move, which is very important. I'll talk about that next. But at the end of the day, all you need to know was that they had a catalyst yesterday morning, AI, biotech, and that's the kind of news that creates all-day and multi-day news. Now, just to touch on that, we always want to know the why behind the move. Never, ever, ever trade stocks with no catalyst, with no reason for the move. Now, that doesn't always mean direct news to that particular stock. It could be a hot sector. Like if Bitcoin's raging, it could be a crypto-related stock. If electric vehicles are raging, it could be an EV stock. If nuclear is hot, if space is hot, if, in the case of EVTV, we had kind of a double catalyst. They're a biotech and they're bragging about AI. They'll never accomplish anything. Stick around for the next video. We'll talk about the penny stock life cycle. But the beautiful thing is we had a catalyst. We had a reason for the move. Everyone will occasionally push back on me about only trading stocks with catalysts because they remember the one stock that moved on no news. Well, 99 of them don't, okay? 99 out of 100 no news stocks spike, immediately drop, and create bag holders. If you're focusing on technical setups with news like EVTV, you could have traded it well yesterday, traded it well today. Heck, you could have missed it yesterday, came back in and had another great trade on it today. So always know why and when and the reason for that stock is moving. If you're just piling into something with no understanding of the why, you're going to be in trouble. So that being said, my friends, definitely stick around for the next video. Hit that subscribe video. If you found this helpful, make sure you subscribe. That way you don't miss the next video where I walk you through the penny stock life cycle step by step. You don't want to trade blind. The penny stock life cycle repeats and repeats and repeats, and it's one of the most important things you need to know.